Remember the dot-com bubble? That wild internet gold rush where everyone slapped a.com onto their name and suddenly became a billion-dollar company until it all exploded? Well, if you're getting deja vu, you're not alone. Because what are we seeing right now with AI? It looks a lot like what happened back in the late 90s, and that should scare anyone watching the markets. This isn't just about hype, it's about money, speculation, and a market bubble that might already be bursting. Let's break it all down. Every bubble starts with a spark, that one moment that makes a complex technology suddenly click with the average person. In the 90s, it wasn't the invention of the internet that did it, it was Mosaic, the first real web browser. That tool put the internet in people's hands. And just like that, billions of dollars started pouring into internet startups. Netscape, Yahoo, Pets.com, all riding the same wave. 30 years later, we got another spark, ChatGPT. AI had been brewing for decades. Algorithms, machine learning, neural nets, all that geeky stuff in labs and research papers. But it was ChatGPT that finally made it real for everyone. You type a prompt, and it talks back like a human. Suddenly, grandma's using AI to write recipes, and CEOs are using it to write emails. The world shifted. Just like Mosaic, ChatGPT wasn't the invention, it was the ignition switch. Before the dot-com frenzy, there was serious innovation happening. Behind Mosaic was the groundwork laid by CERN's release of the World Wide Web in '89, not flashy but foundational. Same with AI. Before ChatGPT, there was AlexNet in 2012. It was a deep learning breakthrough that crushed its competition in an obscure image recognition contest. The secret? Using GPUs instead of CPUs for training, a move that changed everything. That's the moment that put companies like Nvidia on the map. Their stock? Practically nothing in 2012. Today, they're worth over $1 trillion. All because of that shift. That breakthrough led to OpenAI, and OpenAI led to ChatGPT. So yeah, just like the early internet, the seeds were real, the foundation is solid. But that's never the problem with bubbles, is it? Mosaic took 6 years to get 100 million people online. ChatGPT did it in 2 months. That speed of adoption broke records, even faster than TikTok. And just like the internet boom, it wasn't just excitement it triggered greed. In the 90 seconds, tech IPOs exploded. Netscape doubled its IPO price hours before going public, then closed the day at more than 4 times. It was pure FOMO. People didn't care if a company made money, just that it had a.com in its name. Sound familiar? Today, companies are slapping AI onto everything. ClickUp AI, Slack AI, cert your startup name here AI. We're doing the same thing all over again. Here's where things really start to diverge. In the 90 seconds, most of the money flooding into tech came from retail investors. Regular people throwing their 401ks into wild bets. IPOs were the only way for startups to raise money, so every company had to go public, even if they had no revenue. Now, it's mostly private money, venture capital firms, angel investors, giant seed rounds. Some AI startups are getting billion-dollar seed rounds, yes, billion, with a bin chint just based on a landing page and some big names on the founding team. Meanwhile, retail investors are pouring into big tech stocks, the so-called Magnificent Seven. Apple, Microsoft, Amazon, Google, Meta, Nvidia, Tesla, all of them have some AI narrative. Doesn't matter if it's working or not, the hype is driving the prices. Since ChatGPT launched, Nvidia up 835%, Tesla up 85%, Google up 85%. Microsoft and Apple both up 65%, Meta up over 600%. Even if the AI they're building isn't revolutionary yet, the market is acting like it already changed the world. But we've seen this before. In 1999, the Nasdaq doubled in a single year, not because companies were making money, but because they had the internet in their pitch deck. We had companies like eToys, Pets.com, and Webvan, all going public with no profits and sky-high valuations. Some stocks went up 900% just for changing their names to something n.com. It's the same now, only instead of .com, it's AI. And instead of IPOs, it's a mix of private funding and inflated public company valuations. In both cases, the logic was the same. If this tech changes the world, we better get in early, no matter the price. And that's the most dangerous mindset in investing. Want to see what happens when massive established companies go all in on the hype? Look no further than the AOL-Time Warner merger in 2000. An $80 billion deal meant to combine the old-school media giant with the poster child of internet innovation. It was a disaster. The cultures clashed. The synergies never happened. and AOL, once the darling of the internet boom, collapsed. Now fast forward to today. Microsoft is doing something eerily similar with OpenAI. They've invested over $10 billion. They own nearly half the company. They've baked AI into nearly everything they make. But what if AI doesn't deliver? What if this generative boom doesn't actually transform how we work or make money? Could Microsoft be setting itself up for an AOL-sized regret? Let's be clear, just like the internet in 2000, AI is real, it's powerful, it's going to change the world. But that doesn't mean we're not in a bubble. Back then, the excess was obvious. Sky-high valuations, IPO madness, companies with no profits being treated like gold. Now, it's the same playbook, just different actors. Private VC replacing IPOs. 8AI replacing Inotcom. Mega-cap stocks inflating on hype. And the scariest part? All it takes is one correction in the Magnificent Seven for the entire market to wobble. If those AI bets don't pay off, and fast, the dominoes start to fall. One of the biggest fuel sources for the dot-com bubble was the rise of retail investors. In the 1,980 seconds, only about 25% of Americans were in the stock market. But thanks to the introduction of 401ks, which let people invest tax-free for retirement, that number jumped to over 50% by the end of the 90 seconds. More average people than ever were tossing money into stocks they barely understood. Why? Because they were told tech was the future. And honestly, it was just not in the way most expected. Fast forward to now, and 60% of Americans are invested in the market. Except this time, it's not just IPOs sucking up cash. It's index funds, ETFs, and massive holdings of the Magnificent Seven. Retail investors might not be throwing cash at random AI startups, but their retirement accounts are still propping up massive valuations, even when the underlying tech hasn't delivered real returns yet. Once again, everyday investors are riding high on momentum, and they might not even know it. Back in the dot-com era, companies added Inotcom to their name and watched their stocks explode, sometimes by 900%, without changing a single thing about what they actually did. There was literally a company called Professional Recovery Systems that became a tech darling just for rebranding as something internet-related. Now, it's the same grift, just with AI. You've got companies tacking on AI, like a trendy badge of honor, Notion AI, Slack AI ClickUp AI T, Artlist's AI search engine, and dozens more promising AI-enhanced features that either barely exist or barely work. Even startups with nothing more than a website are raising hundreds of millions, sometimes billions, off a pitch and the right buzzwords. It's a branding theater. And when branding replaces actual product value, that's when markets start to crack. Because we've seen this show before. The names are different, the numbers are bigger, but the playbook is exactly the same. Here's the thing about bubbles. They always look like innovation until they pop. The internet bubble did end up changing the world, but it also wiped out trillions of dollars in the process. The people who stuck around after the crash, they built Google, Facebook, Amazon, the real giants. AI will probably do the same, but not before we see some serious pain. Because the problem isn't technology, it's speculation. It's the rush to make money now off something we barely understand. So yeah, the AI boom is real, but so is the bubble. And just like the dot-com crash, a reckoning may already be underway. What do you think? Comment below. And if you enjoyed this video, make sure you hit the like button, and also don't forget to subscribe to our channel for more of these kinds of videos. Thanks for watching.